Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Solana is experiencing a profound fundamental divergence. On-chain metrics are surging, yet the price action tells a different story. Active addresses have hit 7 million. Transaction throughput is nearing 1,100 TPS. This indicates robust network utility and growing developer activity. However, SOL remains trapped at $77. This level is 74% below its all-time high. The market is pricing in fear, not adoption. Traders are watching key support levels closely. A break below could trigger further liquidations. But the underlying health of the network suggests a potential re-rating event. The disconnect between usage and valuation is stark. In the traditional finance sector, capital is flowing into industrial transformation. Meridian 3 Industrials Acquisition Corp has priced its $175 million SPAC IPO at $10 per unit. The target is clear: Industry 4.0. This merger aims to consolidate the fragmented industrial technology landscape. Trading begins on July 2, 2026, on the Nasdaq. Investors are betting on the digitization of manufacturing. The deal highlights the continued appetite for special-purpose acquisition companies, despite recent market skepticism. It signals confidence in the long-term growth of industrial automation. On the macro front, the U.S. labor market presents a complex picture. The official unemployment rate holds steady at 4.3%. GDP growth remains solid at 2.1%. Yet, consumer sentiment indices remain depressed. This widening gap between macro data and lived reality is concerning. Policymakers face a delicate balancing act. Strong employment data supports the case for higher rates for longer. But weak consumer confidence suggests underlying economic fragility. The disconnect may force the Federal Reserve to pivot sooner than markets expect. The narrative is shifting from inflation fighting to growth preservation. In credit markets, Eaton Vance Senior Floating Rate Trust is signaling strength. The fund raised its monthly dividend by 4.5% to $0.069 per share. This hike reflects improving credit conditions and higher interest income. The forward yield now stands at 7.84%. This is attractive for income-focused investors seeking safety. The move suggests institutional confidence in the floating rate asset class. It provides a hedge against persistent inflation. Meanwhile, Guggenheim is flagging a valuation disconnect in the tech sector. Analysts warn that Salesforce, CRM, valuations are too depressed. The stock has risen 4.2% to $163.23. Despite real AI threats, the market is underpricing the company's resilience. Guggenheim argues that CRM's enterprise software dominance remains intact. The AI narrative is creating noise, but the fundamentals are solid. Investors are missing the value opportunity in legacy tech giants. With no major economic releases in the next 36 hours, attention turns to corporate earnings and crypto on-chain data. The lack of macro catalysts allows market forces to drive prices. Watch Solana's support levels. Monitor Meridian 3's trading debut. Keep an eye on consumer sentiment shifts. The market is pricing in uncertainty. But the fundamentals are shifting. That's your market briefing. Follow Rumour with AI for daily market intelligence.